Assalamu alaikum, everyone, and welcome to today's talk show on global finance, a concept that explains how global financial events directly shape local economies, especially emerging markets like Pakistan. I am Ahmed Hassan, and I'll be moderating this exciting discussion. So, global finance, which is basically when the world sneezes, Pakistan catches pneumonia. I'm
Mhm.
joined by full financial Avenger squad. Harman, Maham, Sardar, Samir, Mahanur, and Sahib. Welcome, guys.
Great to be here, Ahmed. Although I think Avengers might be a bit of a stretch. We're more like the cleanup crew.
Fair enough, fair enough. Let's start with the big picture. Harman, you are a definition guru, right? Break it down for the backbenchers. What is global finance?
Okay, so I'll do that. Thank you for opening the floor, Ahmed. So basically, to start off, global is a mashup of global and local. The US, okay, so I'll begin my discussion by allowing you to picture this. The US Federal Reserve basically increases its interest rate by 0.5%. This is a very tiny number, right? But suddenly, this very tiny number will affect your petrol price in Lahore, which will go up, and the stock exchange in Pakistan, in Karachi, basically will crash off, and your uncle's construction business will basically stop. Now, why will all of this happen? It will happen because our global finance and our local markets are connected like a married couple. They're toxic, yet they're very, very committed. Global finance is basically the study of how international capital flows, how our trade policies work, how our foreign interest rates dictate our local economic reality. Now, we like to think that we are independent, right? But financially speaking, we are just a small boat in a very massive ocean.
So basically, we get bullied, right?
Yes, basically, yes, we do get bullied. We are literally the youngest sibling in the global family. It's literally that. So, to get technical for a second, I'll explain you the concept of transmission mechanisms here. In FIM, we have studied how a shock in one market transmits to another, right? So we depend on global oil, we depend on global loans and global trade. So when the global supply chain tightens, this shock wave hits us very instantly.
And also, it's just not about decisions, it's sentiment. If the Wall Street, if the Wall Street decides to wake up feeling risky, money flows to
Mhm,
Pakistan. If they wake up scared, money leaves. We're just
mhm.
subject to their mood swings.
Yeah.
That sounds unstable. Herman, give me one solid example of this transmission before we move on.
For sure, I can do that. Look at how the capital flight mechanism works. When the US raises its rates, the investors run back to the US for safer returns, right? They sell Pakistani rupees to buy US dollars. That very selling pressure crashes the rupee. And when the rupee crashes, everything we import, from petrol to even Panadol, becomes even more expensive for us. So, this is exactly what the transmission mechanism is. So the federal rate hike will lead to the capital flight, which will lead to currency devaluation, and that will lead to local inflation in our very country.
Okay. So, Maham, let's pick up on that. Herman mentioned the Fed. Why are we so obsessed with US interest rate? Why can't we just like why can't the Bank of Pakistan simply just ignore them?
Well, I wish we could, Ahmed, but here's the concept of interest rate parity. Investors are constantly looking for the best risk adjusted return. If the US offers 5% of risk free treasury bonds, for example, why would an investor keep money in Pakistan at 15% with higher risk? They wouldn't. They just say buy Pakistan and hello, your US treasuries. This is called hot money. It's a short term speculative capital, you could say. It comes in fast when the times are good in Pakistan, if you assume. And it leaves faster, money leaves faster, even when rates change.
And that exit is simple. When they leave, they take dollars from our reserves.
Mhm.
Okay.
Exactly. And so to stop them from leaving, you could say the SBP is forced to raise our interest rates. We have to widen the spread to make them staying in Pakistan more attractive for them. But here's the catch. You could say that high interest rates, for example, 22%, could kill the local economy. It could become too expensive for locals to borrow in the economy.
So we burn our houses to keep the guests warm.
That is a good analogy. Um, Reuters in 2024 actually noted that our debt crisis worsens because global conditions tighten. We are actually forced to tighten our monetary policies, and not because our economy needs it, but also because the global market demands it.
And just to add, this kills the real interest rate. If inflation is 25% and rates are 22%, the real rate is negative. But if we raise rates to 26%, businesses shut down. It's a lose-lose situation dictated by global flows.
Okay, that's fair enough. Samir, let's talk about rupee. We see these headlines like rupee hit historical low. Why does that happen so fast?
Well, it's the exchange rate pass through. In Pakistan, we have a managed float exchange rate, in theory. But often it feels like a free fall. When global crisis hits, two markets diverge. The interbank rate, which is the official rate, and the open market rate, which is what you get at the money exchange rate.
So what is the difference?
Well, you see, the interbank is where banks trade dollars for LCs, which are imports. The open market is for you and me. When panic sets in, the spread between these two widens. People start hoarding dollars because they don't trust the rupee. This is dollarization. ORF in 2025 noted that our debt is structurally tied to these global conditions. So when the rupee falls, our external debt, which is in dollars, effectively doubles in rupee terms.
It's like taking a loan in dollars while earning in rupees.
Exactly. And if you owe $100 and the rate moves from 150 to 300, now you owe 30,000 PPR instead of 15,000. You didn't borrow more,
Yeah.
but you're twice as poor. So this volatility isn't just a currency issue, it's a solvency issue.
So is the speculation the villain?
Well, partly, but the villain is really our lack of foreign exchange reserves. If the SBP had $50 billion in the vault, they could intervene and stabilize the rate. We have only $4 billion. The market knows we are weak, and the speculators attack on us.
Okay, Sardar, you are our business guy in the panel, right? Samir talks about reserves. How does a lack of reserve hit a factory in Faisalabad?
Ahmed, it stops everything. We need to talk about letter of credits, LCs. An LC is a guarantee from a bank that payment will be made. When reserves are low, the SVP tells bank stop opening LCs. Suddenly, I can't improve raw materials. I can't import machinery parts. Businesses delay projects. SMEs struggle to afford loans. Factories shut down shifts. Yeah.
So it's not just expensive to do business, it's technically impossible.
Precisely, yes. It creates a supply side shock. Even if people have money to buy cars, the car company can't make them because the CKD kits parts are stuck in the port. PID 2025 mentioned that inflation here is mostly caused by these imported shocks. It's not just that we are printing money; it's that we literally cannot bring goods into the country.
And that scarcity can actually drive prices up even more.
Right. Families pay more essentials, not because demand is high, but because supply is choked. We are paying a premium for the country's poor credit rating.
Okay, that's fair enough. Manu, let's talk about the kitchen. Why is cooking oil so expensive? Is that also local?
100%. That is the most direct link. Pakistan imports the vast majority of its energy and a lot of its food, like palm oil and tea. When when global oil prices spike, three things happens instantly. First, transport cost rises. Everything moves on the truck. Second, electricity price rise. We burn fuel to make power. And third, food inflation. Tractors need diesel and fertilizers need gas.
Yeah, and guess who imports both oil and wheat? It's us.
Exactly. During the Russian Ukraine conflict, global wheat and oil prices increased drastically. We had to buy them at those high prices. This drains our reserves, which crashes the rupee, which makes the next batch of oil even more expensive. It's a death spiral. Don warned that Pakistan is extremely exposed to these shocks. We have no strategic reserves to cushion the blow.
So we are in like importing other countries' war.
We are importing their inflation. We really have main character energy in all these wrong stories.
Okay, Sahib, we have blamed the Fed, the wars, and the oil market, but surely we are at the fault too, right? Why is India and Bangladesh managing even better?
Uh, Finally, the hard truth. We suffer more because our structure is weak. And in financial institutions and markets, we look at the twin deficits. Firstly, there's the fiscal deficit. The government spends more than it earns. And then secondly, there's the current account deficit. We buy more from the world than we sell to it, right? So we have low exports and incredibly low savings. And because we don't save money in banks, our banks don't have enough capital to lend to businesses. Instead, banks lend to the government to cover its deficit. This is called the crowding out the private sector. Our financial markets are shallow, and we don't have a deep bond market. We rely on hot money and foreign loans.
So when the global water gets rough, our boat leaks because it has holes in it?
Exactly, Sardar. Global shocks hit Pakistan harder because we are already standing on thin ice. Other countries have savings and reserves to act as a buffer. We have, well, just hopes and prayers, I guess.
And the global system keeps heating the ice.
Also, look at our tax base, guys. We rely on indirect taxes, such as sales tax on fuel or food, which hurts the poor. We haven't documented our economy, so the gray economy thrives while the formal economy suffers.
Hmm. Okay, team. We have depressed the audience enough. Let's pivot to a solution. How do we fix this? How do we build a financial immune system?
Energy transition. We spend billions on imported oil. If we shift to solar or hydro or like nuclear, we stop bleeding dollars for energy. That disconnects us from global oil shocks.
Also import substitution. We need to make things here. Why are we importing mobile phones? Assemble them here. Why import food? Grow it here. Let's reduce the demand for dollars.
Right. And remittances and diaspora bonds. We need to channel remittances to official banks, not Hundi, Hawala. And we should offer the overseas Pakistanis good rates on bonds like Naya Pakistan certificates. So they invest long term in Pakistan and they don't just send cash for our consumption.
I would suggest deepen domestic markets. We need to encourage locals to invest in the stock exchange and corporate bonds. If companies can raise money from Pakistani citizens, they don't need to borrow dollars from abroad.
And I would like to add exports. We cannot survive on textile alone. We need IT, service, and diverse manufacturing.
Oh, I highly agree with that. I believe that resilience will definitely come from diversification, right? We need to be less of a specialized factory and more like a diversified portfolio. So I believe that needs to be consistent and done at the very moment.
Yeah, that is beautifully put. So the takeaway is global finance isn't going away. The world will keep sneezing. We just need to wear warmer jacket. From interest rate to oil prices, we are connected. Thank you, my brilliant panel, Harman, Maham, Sardar, Samir, Mahnur, and Sahib. And thank you all for watching. Stay financially literate, stay safe, and Allah Hafiz.
Allah
Allah.
Hafiz.
Allah Hafiz,
Allah
Ahmed.
Hafiz.